You're doing this too soon. But you can't help it. You want to get a win. You want to make money because you think that that's going to be the decision maker or the confirmation that what you're doing is the right thing. When really what you're doing is you're solidifying bad habits. You are ensuring that you're going to be a piss poor trader forever. If you trade without a stop loss, like a dumb Yahoo, you are setting yourself up for inconsistency. So you have a full complete year if you do it right, optimally. 6 months of back testing and tape reading, and then 3 to 6 months of consistently aiming for a demo results or a track record, if you want to go so far as to say that, for 6 months that are consistently profitable. Then and only then are you prepared mentally, emotionally, to even consider, and I'm not saying that you should do it, but then is when you should consider putting real money in. And that's a decision you're going to make. There's no ICT lesson that says, okay, this is the deciding factor. This is when ICT says I should do it. No, you are going to make that decision. Some of you may never do it. You may be too scared, and that's fine. That means you can't do it. So everybody's getting what they're looking for. There's a lot of people out there that can't trade. They can't trade. They can't do the pushing of the button. They can't absorb the uncertainty that is inherent in this industry. And there's a lot of uncertainty. And it stems internally. Because if you can take yourself out of the equation, all you're doing is looking for a market that's going to go up or go down. And where's it going to go up to, or where's it going to go down to? And where's the market at right now? Has it created an imbalance? Has it taken stops? That's the questions you're asking. But see, what you do, and I did when I was younger, I bring all our horse shit to it. Wife left me. I don't feel well. I'm not able to bench press this much. My friends are doing better than me in their job. Fucking Carl's got the parking spot again this month. Everything's going to be a plague and a distraction. And you're going to bring all that nonsense into your decision making, and you're going to clutter up this whole thing. And I personally think that subconsciously, I think we as humans like to do that because it provides us a perfect excuse why we fail. Oh, of course we're going to fail. I have all these other things to contend with. No, you didn't. You brought that shit into trading. You got to find a way to be able to remove all that outward influence, these outward factors that will plague anybody. Doesn't matter if you have a high aptitude in terms of intelligence, or if you're just a common person like I was when I came into this. I'm not an intellectual giant. I'm not superior in my intellect. I'm a blue collar guy. Like, I'm straight out of freaking Middle River, Maryland. I'm like, that is the definition of blue collar. They called our neighborhood Cardboard City. Literally, it doesn't exist anymore. They built new, I think it was Ryan Homes or Ryland Homes. I think they put those over there, right across the street from Middle River School. My address as a kid was 30 Henderson, and it was literally right across the street from Middle River. But you got to find a way to keep that stuff from coming in. You can't invite it. Know and respect the risk. Okay, and now obviously that's the part everybody wants to ignore. Well, I just want to win. Just show me how to win. I don't want to know about a stop loss. I know I should use a stop loss ICT, but I don't know where to fucking put it, so I'm not going to use it. And then when you blow your account or you go in severe drawdown, what do you feel then? Weigh out that right now. Okay? If you haven't even started pushing a button yet, weigh out the pressure of fearful of knowing where to put a stop loss versus not using a stop loss and regretting it, and how bad it can be before you either get out or they margin call you. Which one do you want to suffer through? Obviously, you want to flounder in the beginning of learning where to put a stop loss. And that's the benefit of giving yourself time. Folks, that stuff is a complicated thing. You can't just simply say, here's the rules, because I've already done that. I've already shown you where to put a stop loss. The fair value gap, where's the high of the fair value gap? Okay, if you allow yourself in terms of the risk to have it to the swing high behind the high that forms the fair value gap, I'm going to use the swing high. But if I know everything's in my favor, I'll use the high of the candle that makes the fair value gap. And that's where my stop loss is. And you see how the market performs. Look at my examples this week. Don't look at the total amount of money that was being risked. Look at the precision placement of the stop loss and how it was never in jeopardy. I was not sitting there watching those fucking trades thinking, I hope it doesn't hit my stop. The stop's there to do its job. It's being paid to do its job. Get me out at that price because I don't want to be in it going higher or lower if it's moving against me. I'm not worrying about that stop loss. I'm focusing on the price moving where I'm expecting it to, the draw on liquidity. I'm focusing on, is the market continuously giving me all signatures and signs that it's doing what I expect it to do? Is it breaking with it? If I'm bearish, I want to see up close candles being broken. I want to see price digging through up close candles to the left. That means it's eating into all that shit. And I want to see up close candles. I mean, I think I may have said this wrong. Let me take that step back here. Yeah. If I'm bearish, I want to see down close candles being broken, because down close candles in a bullish market, I'll look for opportunities for that to support price either through mitigation or outright order block. So I'm looking for down close candles to be driven through in price action when I'm bearish. Because otherwise, if you start seeing these down close candles to the left starting to support price, then you might need to suffer through a retracement, or it could have made its low. So I'm looking for those signatures while price is delivering in my trade. I'm focusing my attention there. I'm not worrying about or panicking about the stop loss being hit. And that's where all of your mindsets are. As a new trader and those that don't want to put a stop loss, you know, if you put that stop loss order in there, and you may have a limit order in to get out, above or below, based on whatever you're doing, if you're going long or short, you'll put a limit order in to get out. But you're afraid to use that fucking stop loss order because you know you're doing this too soon. But you can't help it. You want to get a win. You want to make money because you think that that's going to be the decision maker or the confirmation that what you're doing is the right thing. When really what you're doing is you're solidifying bad habits. You are ensuring that you're going to be a piss poor trader forever. That long pause is intended. I wanted you to hear that and register. If you trade without a stop loss, like a dumb Yahoo, you are setting yourself up for inconsistency. I promise you. Look at everybody out there that's trading without a stop loss. They're emotional. They flip out. When it's wrong, it's fucking really bad. And they can't fix it. You can't go back and, let me limit the amount of drawdown I took. No, it's too late. So you have to have that time to learn how to trust yourself. Stop listening to these fucking clowns selling courses and bullshit, trying to get you to be a part of their groups, following their bullshit flawed logic. That you just don't use a stop loss, or put a stop loss so tight that it's unreasonable. And or they're saying do live trading sooner because ICT's an old man and he's fuddy-duddy and he's set in his ways, and there's newer ways to do it. There's new technologies. There's new ways to get in there and start making money right away. Those technologies may very well be valid, but you still are you. And you are bringing in to this equation your frailties as a human being, your character flaws, your personality disorders. Everybody has something wrong that hasn't been dealt with. Nobody walked into trading with their shit right. Nobody. They discover a lot of the things that they didn't notice about themselves. And the better ones, the traders that are consistently profitable, they're the ones that have done the work and the painful pruning in their personal life, in their mindset, their thought processes. All these things have been augmented to get themselves in alignment with allowing success. But you don't see what you're doing. You're resisting success by doing all the wrong things, thinking you're protecting yourself from the things that you've identified that is fearful, which is being wrong or losing money or ultimate failure. And that is avoided by doing the very things I'm telling you to do. You have to learn how to encounter, well, those personal wrestling matches is where you don't like what you feel about yourself. You may be wrestling with the fact that you think it should have been easier for you to learn by now. I have so many students that have went through that and then look back and say, you know what, I made a big deal about it then. And I felt like it was longer than it really was. And now I'm looking back, it's like, I made a bigger deal out of that shit than it really was. And I kept myself in that situation longer because I grieved about it should have been sooner. It should have been sooner, instead of just doing the fucking work and getting you through it. Like when you join the military, boot camp, they put your ass through it for 6 weeks or so. And look, soft bodies going in there, they're not soft bodies after 6 weeks. They're not soft bodies, and they're ready to rip your shit up. They're salty. They're ready to get out there and beat somebody's ass because the drill sergeants or whatever put it on them. So they're going to deflect and put it on whoever they say is the enemy. Well, you need to go into your development with the same mindset. It's going to suck. You're not going to have that sugary snack every day. You're going to have to defer all those little things on the weekend and start studying and doing those things that are uncomfortable, that may not pan out for you right away, but the end result over time will. You got to just stay with it. But you have to respect that risk. And if you don't know what your personal risk percentage is, what's the maximum that you can really suffer? And you're not like, oh, I can take 2%. Some of you younger guys, well, ICT said he did 5%, so I can do 5%. Yeah, I could do that. No, you can't. No, you can't. If you had an account with $100,000, you feel rich because you have $100,000. But if you lose $5,000, you start thinking, wait a minute, that's $5,000. Man, I could have done this and that, and all of a sudden you start thinking about, oh, you got buyer's remorse now. If I wouldn't have done that trade, I could have bought this or that. I could have done that project around the house. I could have put the deck on the back porch, and I could have done this and done that, and I could have fixed this in the car. What are you doing? You're bringing in weaknesses and character flaws. Instead of saying, okay, I did that wrong. I risked 5%. That's stupid. It's over leveraging. Don't do that. Don't let the industry standard in all the books, and even I have parroted this stuff, 2% is not optimal. Anybody that says it's optimal is full of shit. They're lying, and they're probably not even profitable. Your risk percentage, the maximum of that risk for your total equity in your account, it might only be 0.5%. And you can trade very fluidly in the marketplace, not feel any kind of unnerved, no second doubts about what you're doing while you're trading, where your stop loss is. If you get stopped out, it's not going to kill you. It's not going to hurt you. And 0.5%, it's easy to make back. Really, really easy to make that back, regardless of whatever your equity size is. So the secret sauce in this whole business is knowing you, how you are going to derail yourself. Are you easily swayed by other people's opinion, even mine? You might be looking at a market, and I have students that have discovered this in my private mentorship. They have an idea about a marketplace, okay? And because I'm using higher time frame, my outlook is a little bit longer term than them if I'm talking about a daily chart. But they might have an idea about taking a trade that would be opposed to that idea. Not necessarily nothing wrong with that, but because their mentor was saying he believes, or I believe, that it's going to go here, it made them second guess their own analysis. And then that trade they were going to try to take panned out, and my stuff still ended up going there, but days later. My entire time frame for bias. Theirs was, I'm taking money out of the marketplace tomorrow in the next session. But because I was giving my analysis, they were tripped up by my opinion. My opinion should not have any influence over yours. Once you have your own model, you should not be subscribing to whatever I think. But your risk percent You need to know what that is. And you're not going to know what that is until you spend 6 months, ideally, tinkering with it. Where have you worked with it? Because 2%, it's not a lot, but if you have 2% and then you cut the loss and you risk 1% and you lose and you risk 0.5% of that, okay, that's 3.5%. 3.5% doesn't feel like a lot, but what happens if you take another loss and you're stuck at 0.25%? And you have to do that over and over and over again. It will not run your account down like 2% every single time. But if you start with 0.5% and you take a loss, it's going to feel like a mosquito bite. It's a nuisance. You wish it didn't happen, but it's really not bothering you. But if you keep going back into it and scratching it, it's going to do what? Potentially get infected, create an open sore. And that's what you end up doing when you start treating your losing trades like a mosquito bite. You want to just keep itching it. It's done, it's damaged. Let it go. Just leave it alone. Ignore it. Move on to the next thing. But your risk has to be unique to you. Don't just take the industry standard that everybody regurgitates, 2%, because that's too high for a new student. It's too high. Too fucking high. And there's people out there that will claim that you got to push it. You got to know when to push it. How are you going to know when to push it if you've only been messing around for a couple months? Seriously, answer that question. How could anybody reasonably expect to know their reactions, their expectations, how they're going to react to the profit if it starts moving in their favor? You want to know what's scary? Being in a move that you didn't expect to be so rapid and sudden, and you didn't have a limit order in yet, and it starts railing in your favor. That's terrifying. As a new student, it's thrilling as shit, but it's terrifying because you're like, what do I do? You're like a deer in headlights. That's scary as shit. You think losing money is scary. Now that's regret. And you're just fearful of doing it the next time. But when you're in a winning trade that you didn't expect to be that powerful and you didn't have a limit order placed in, and it's just running like crazy, that's a terrifying feeling. Like you get paralyzed. You're afraid to get out because what if it keeps running? And you're afraid to stay in it because what if it's going to reverse? That's a weird feeling for a new student to experience. And you have to have time for those things to creep in. And it teaches you a lot about yourself. And books don't talk about that stuff. All the books I've ever read, they don't ever talk about what I'm talking about here. Even Mark Douglas' book, as good as it is, and it's a classic, he doesn't really hammer all these things and really put it in a way where, hey, let's just talk about it vaguely. No, these are things that you're going to deal with, and they're going to impact your trading. They're going to really have an impact on how you develop and how you manage yourself as a trader. And you can't just take industry standards or things that are tossed around as that's going to be a perfect fit for you. No, like you have to determine what is optimal for you, and it may be less than 1% risk, or it might be just 1%. Others might thrive with 3% risk. I think that's a little nuts for a new trader, but hey, you know yourself.